So how can you blend supply and demand with discount and premium zones to be able to make reasonable trade decision? In the last video, I told you guys I'll be starting a series where I'll be explaining how you can blend these two concepts to better your trading. So let's get into it. This is a typical chart example or typical graphical example of a supply and demand structure, whereby when we have a break of structure to the upside, just like this is a break of structure. We wait for price to trade into a demand level around here for us to take a buy to the upside to continue this trend, and then we saw another break of structure to the upside just like this, right? We just wait for price to trade to any demand level for us to take a buy. Now a demand level is a buy zone, right? Same thing applies to this break of structure. Wait for price to trade into a demand level or this demand level to take a buy, leads to another break of structure, and this was the last break of structure, right? So this is like another break of structure. So if price wants to continue being bullish, we just want to mark this level as a demand level for price to retrace back into it just like this to give us a buy opportunity or to continue the bullish trend. So this is just a typical example of a demand price action whereby you want to be buying, and same thing applies to the bearish too. When the market is bearish, this is just the opposite of the bearish pattern. Right now, what is important is the discounts and premium zones. How can you blend discount and premium zones while trading your supply and demand? Now when we have, for example, we have a bullish structure like this and price impulses to the upside. Let's pay attention, please. When price impulses to the upside, when like this is the current low and this is the current high. Now whenever you see a break of structure to the upside, we are left with two territories in the market. We are left with what? Two territories in the market. We have the buyer's territories and we have the seller's territories, right? So how do you want to know the buyer's territories and the seller's territories? Just take your Fibonacci tool, just like this. You place it from the low that caused this break of structure to the current swing high, just like this. That high that you see the price is retracing, like when you see price retracing like this becomes your swing high, right? So you just want to place your fib like this from this high to this, from this low to this high. So now you can see three lines on my chart. This is the first line, the middle line, and the last line. This middle line separates this my fib tool or this my Fibonacci tool into two how will I put it, two sides, right? This is the zone below here is my discount zone, while the zone above is my premium zone. So whatever buy I want to take should be sitting inside this discount level, and whatever sell I want to take should be sitting inside this premium level. Do we understand this? Now let me give you more examples. Since we've understand that if you want to mark out your discount and premium zones, you just have to take your Fibonacci to place it from the low that caused the break of structure to the current high that price is retracing from, right? So just imagine we have something like this. We have a break of structure to the upside, first break of structure, and then we have another break of structure, right? So or probably let me just say we have something like this. Sorry, we have something like this because price doesn't just move in a straight line. It's full of choppy movement, right? Let's say we now have something like this, right? So it is very, very important for you to know how to mark out your major break of structure and your minor break of structure. Now this is the first major break of structure, just like this, and we had this as another major break of structure to the upside. How do I want to mark out my discount and premium zone? Still on that, take your Fibonacci to place it from this low to this current high, right? So whatever other block that you have sitting inside the premium zone is not a valid order block or demand level to buy from, right? A demand level is an accumulated zone, a zone where you are looking forward to buy. So this is also a demand level. Let me mark it out. A level like this is also a demand level, but it is sitting inside the premium zone where we are supposed to be looking for sell. So if I want to take a trade like this, I will just wait for price to trade into this last order block, or maybe if I see a confirmation for me to buy at this level, I'm going to take a buy. But it is not sound, it is not reasonable for you to just take a buy at this level because it is a demand level, right? You want to wait for price to trade into a discount price before you can take a buy to the upside, just like this. Do we understand? Same thing apply to the bearish market. So let me give a bearish example. Just imagine we have a bearish pattern like this, break of structure, and we have another break of structure. Maybe we have something like this, right? Or let me just adjust this a bit. So we have this first break of structure and we have this second break of structure, right? I told you guys that you have to understand major and minor break of structure, which I think I've explained all of these concepts in my previous videos, right? So this is a major break of structure and each of these one are like minor break of structure. So just take your Fibonacci 2, place it from this high to this low. We are left with what? Two zones. This is our discount zone and this is your premium zone. So you don't want to risk taking a buy at a discount zone. I mean, you don't want to sell at a discount price because this looks like a demand level that a buy can hold, but it is not valid. You want to wait for price to trade into a premium zone before you can sell price. Right now, let me give you one tricky example. Probably you want to catch a confirmation. Probably you want to catch a counter trend entry, right? Let's say price is bullish, just like this, and then we have another break of structure, and then we now had something like this, right? Something like this. Now let's assume before this particular thing happened here, price traded into a higher time frame key level or a higher time frame POI, just like this. Please pay attention. Now we know that this is a major break of structure and this is also a major break of structure, but this is a minor or small break of structure, which it is not really advisable to trade if you don't understand this. So now what do you want to do again? You want to take your Fibonacci to place it from this high, from this low to this high, because this is the low that led to this break of structure. If you should jump to a higher time frame, you won't see this break of structure, you only see this break of structure. That's why you need to understand time frame alignments, right? Time frame alignment and major and minor structure is going to help you a lot. So what do we want to do here? This is our discount level and this is our premium level. So for us to take a sell at this level, we don't want price to trade, or let's just imagine we have a sell setup here. We have structural liquidity, right? So this looks like a very valid A plus setup. We have an order block here. We have this as sweep of liquidity. We have this high as structural liquidity. So we can just take a sell at this level. Stop loss, our take profit can be at this level, and then our stop loss can be somewhere around here. So if you want to take a trade like this, I'm about to end the video. If you want to take a trade like this, you don't have to wait for price to trade significantly into this zone. Once price trades significantly into your discount level, the next time price will be coming to your POI, it is going to take it out, leading to another break of structure. So what do you want to do? You want to see something like this. You don't want price to trade into the discount level before mitigating your POI. You want to have something like this. Price trade into it first, then dump into your discount level. I hope you find this video educative and helpful, and if you want more content like this, make sure you follow this page and like this video. And if you want to join my community where I share all my trades for free, the link is in bio. I will catch you there. Peace.